Joining in right now from Sydney is Peter McGuire, Chief Market Strategist with FX Global Capital. Peter, thanks for joining in. You know, the headlines that are emanating from Tokyo, from that IMF and World Bank ongoing meetings there, they're pretty much on the earlier lines as well. They're talking about confidence being fragile, about Euro crisis being the key threat. But Peter, I mean, we do know that, of course, despite all of these steps that are being taken by policymakers, the agenda sort of remains critically incomplete. So are the currency markets really factoring in things like capital flight, breakup fears, etc.?
Well, good morning, Bianca. Look, I don't necessarily think so. We need to be very conscious that the US dollar's had a little bit of a rebound in the last couple of days, and also we had China pretty much off market all of last week with Golden Week. So the market is very much in full swing as far as the US is concerned, with presidential elections less than a month away, and I think the market is very much looking and centering itself on that. And of course, the Syria and Turkey situation hasn't gone away, and also fiscal cliff just around the corner. So that's really where the market's at the moment. I think in the sense of things, also including, of course, the upcoming IMF meeting in Tokyo later this week, Bianca.
Peter, earlier we'd seen risk-oriented currencies rising after the People's Bank of China injected a large dose of liquidity into the Chinese banking system, raising the optimism for further policy moves. And risks from the Eurozone, we know that it can spill into emerging markets where growth is already slowing. In such a case, how do you see such currencies being impacted?
Well, I think we're going to see a little bit more of a continuation of weakness for the euro. I don't see any good news stories coming out of that on the whole. And realistically, I'm worried about what's happening as far as Spain and Italy. They've really put their hands up here. And of course, the ongoing issues with those austerity measures in Greece. I think this is just the start of what we'll see in 2013 as far as civil unrest and those high unemployment numbers that are really on everyone's radar, Bianca. You know, Spain at 25 and 30% unemployment. So I don't see any good news stories for euro, and I think that you're going to see a further weakening of the currency.
Should investors remain bullish on the dollar, Peter? Because to some market experts we've been talking to, I guess they're saying that the issues within the US economy seem to pale in comparison with what's happening in Europe and even Australia.
Well, yes, but I think that the euro, because of its the composition, that you've got all of those countries under one banner, yet you've got some that are performing okay, and a lot of them are performing very, very poorly. You know, the OKs are Germany, for example, and the poor to dismal, you're talking Italy, Greece, Spain, and Portugal. So, that's the reality on that sense, whereas the US has the ability to print more money, but we've just got to see what happens as far as the introduction of the cliff with tax reforms and who actually gets into power, Bianca, and there's no guarantee that Obama's going to be there. So I think it's just a wait and see for the next 3 to 4 weeks.
Okay. Peter, thanks very much for the perspective there. Thanks for joining in and speaking to the viewers of NDTV Profit.